Yes, sir. Yo, what is going on, guys? Welcome to another video. In today's video, we are going to discuss the week ahead, the stock market, the Federal Reserve, and what I honestly think as it relates to buying assets, more specifically stocks, right? So let's go ahead and start off with this. So what do we got coming up this week? Well, Monday is actually going to be pretty boring. Wouldn't be surprised if the market had a little bit of a bounce, but who really knows? Because yeah, things suck. But Tuesday, you actually get PPI numbers that come out. You get the producer price index. Those numbers actually come out on Tuesday. And Monday and Tuesday are basically meh, right? The exciting thing, the fireworks, the moment of truth for us is actually Wednesday. Wednesday when it actually gets crazy. And the reason why is because Wednesday is actually when we get the FOMC meeting and we get Fed Chairman Powell speak. So here's what you're going to get. You're going to get the Fed interest rate decision. We're going to find out whether they are going to hike rates 50 basis points or 75. We're going to find that out. You've got the Fed FOMC statement, which comes out at 2 p.m. Eastern time. You get the Fed FOMC economic projections, and then you have Chairman Powell who actually speaks at 2:30 p.m. Eastern time. Now, here's what's interesting, right? Because this is actually going to be tricky. This FOMC is going to be very, very tricky. And the reason why is because Chairman Powell can actually speak extremely hawkish if he wants to. Like, he can just be a mean, angry hawk, you know? But if rate hikes remain unchanged, meaning he still goes with 50 basis points instead of 75, which is kind of what I believe should happen, the market could actually like that. So that's why I said it could get really tricky. You know, he may very well come out in a meeting and speak, and he may be extremely hawkish. He may start saying we might do this, we might do that, we're planning on doing this. But then if he comes out and says, but we're still hiking rates only 50 basis points in this meeting and probably in July, the market actually could rally because I actually do think that the market is pricing more hawkishness in. And in my opinion, he needs to be a lot more hawkish than 50 basis points, in my personal opinion. And I'm not the only one who thinks that. Barclays thinks that. And there was another bank that said that as well. And I covered that in one of my videos. And so it'll be extremely tricky. I still don't think this is a good week to buy stocks. And I've said this in numerous videos that the month of June was going to be extremely volatile. And I was right. I said that the month of June was going to be very painful. And it turned out to be so. And I remain my opinion that this is not the time to buy stocks. Now, on the bright side, there actually is finally some good news, guys. I actually do think it's almost time to finally begin to put some cash to work. I do think so. Again, we're never going to catch the bottom. The market could fall way further for all we know. But I just want to make sure I'm not buying at the top. That's really what I'm trying to do here. I don't want to buy at the top. And I want to buy at a point where there's a lot more upside than downside. I think some of the YouTubers who told you guys to buy stocks at 4,200 back when the S&P basically hit 4,200, was at 4,100. I think that was terrible advice. I think that was stupid. I think that was I think it was just plain wrong, and I made that very clear. But I think with the S&P at 3,900 and probably going lower, I think depending on what happens within these next few weeks, because like I said, I wouldn't buy anything right now, but I think we're starting to get to a point where it might finally start to make sense to actually put some cash to work in individual stocks. Now, if you're looking for something to buy, this is just my opinion, I actually do think that buying the S&P 500 right now makes sense. I really do. That's really the only thing that I'm comfortable buying right now. I'm fine with buying like an S&P 500 index fund. To be honest with you, I'm not even comfortable buying tech right now. So if you were to say, well, Echoes, what about other sectors? Can I buy a green energy ETF? Can I buy a banking ETF? Can I buy a technology ETF? Can I buy Cathie Wood's fund? I don't think it's time for that yet. I really don't. I still would stay away from all of that. The only thing that I'm comfortable buying is like a total stock market index fund, like VTI, or really the S&P 500, which would be like a VOO or something like that. That's really the only things that I'm comfortable buying at this point. So next week, could I maybe put some cash to work and buy the S&P 500? Yeah, I might do that. That's possible. But in terms of individual stocks, I'm still going to be patient. I really am, because there's just so much bad going on. And I know people don't like to hear it. I know it sucks. But on this channel, we keep it real. And we're always going to keep it real, right? I mean, for crying out loud, consumer confidence is at an all-time low, right? Americans are borrowing more than ever. You know, credit card debt is up tremendously. Inflation, we just got those readings. We set a new record. So inflation is at 8.6%. That is the highest in 40 or so years. That is the highest since 1981. Average gas prices actually went above $5 for the first time ever. A lot of stocks are in a bear market. The tech sector is getting killed. Bitcoin is getting destroyed. It's looking very much like we're going to be in a recession right now. The Fed does not seem like they have it under control as it relates to fighting inflation. So you guys see what I'm saying? So when you put all of that together, it's easy to say all of that is priced in, but it's really not. And the market can't price things in that it doesn't know. Like, what if we have an extended long recession? What if some of these companies' earnings, they revise their guidance for Q2? What if that extends? What if they start revising their guidance for Q3 and Q4? What if things get really, really bad? And that's kind of what I'm waiting on, right? I want to see a little bit more certainty and clarity on what freaking direction we're going in. Because right now, it really looks like the stock market is ready to make that next leg down. It really does. It looks like the stock market is extremely bearish. I mean, if you look at some key levels on the S&P 500, we didn't go as high as I thought we could for this bear market bounce that we just got. And that's actually a really bad sign. Like, the market is extremely bearish. The market is extremely fearful. And you got to remember the quote, stocks can remain irrational longer than you as an investor can remain solvent. That's just how it goes, which is why I'll continue to preach on this channel that cash is king. And so for me, I'm just kind of sitting and waiting. I'm paying close attention to what's going on. I also really want to see those recession numbers for July. The recession numbers, we'll find out if we're in a recession for sure by July. And we'll get that Q2 GDP read, and we'll be able to know if we're officially in a recession. I can't make it an opinion on whether we are or not. I think as we start to get more data, I may be able to give an opinion on whether I think we're actually in a recession right now. Now, one thing I do want to say is I can't make an opinion if we are in one, but emotionally, I can tell you I feel like we're in one, right? It really feels like we're in a recession right now. For me, it really does. I mean, gas prices are insane. And normally, if you look at history, normally when gas prices shoot up to the roof like that, you normally are in a recession when gas prices are this high. That's normally what happens when gas prices go this high. So that's already one indicator. Obviously, the yield curve inverted. That was another indicator. Consumer sentiment is low, very low. So even if we're not in an official recession, clearly the average consumer feels that way because consumer sentiment is negative, and consumers overall are kind of like me. They feel like we're in a recession. You've even got rappers like Cardi B tweeting on Twitter, like, when is it going to be announced that we're in a recession? Like, even rappers are starting to get interested in this entire thing. And so I just think that we got a lot of pain coming, guys. I mean, could we get maybe some sort of short-term something? Maybe. But remember, I'm a long-term investor. So for me, my long-term picture is I'm still invested. Remember that. I'm not 100% cash. But I'm fine with holding some cash. I really am. I'm still fine with holding some cash right now. And I'm really not in a hurry to buy any stocks. I want to see what Jerome Powell does. I think it's a lose-lose either way because if he hikes rates 75 basis points, for me, that's good for the economy, but bad for stocks. If he doesn't hike rates 50 basis points, he will continue, in my opinion, to be behind. I think he needs to hike rates way more. I think this whole soft landing thing, I think just like they came out recently and they basically said that they were wrong when they said that inflation was transitory, they were dead wrong. I think they're going to come out and say again, eventually, not now, but I think maybe in a few months they'll come out and say, we were wrong about getting a soft landing. I don't think there's any way that the Fed is going to be able to get a soft landing. I think they're going to have to force us into a recession. I think things are going to get much worse before they get better. And to be honest with you guys, I know nobody wants to hear this. I know it's hard to hear, but I'm just not optimistic. I'm actually pessimistic right now. I don't see anything good coming within the next few months. I've been preaching consistently on this channel that this is going to be a very bad summer, and so far that is shaping up to be true. This has been a pretty bad summer, and I don't think it's going to stop. I remain my opinion that I think next month CPI is going to be worse than this one. I think inflation could go as high as 9% next month. It could. And this is just me as a consumer, just going to the store, buying groceries, buying food, getting gas. June has been really bad for inflation. Like, these prices are insane, and honestly, they got to go. I do still have some worries about midterm elections. We still have a while before we get to that point. We've got several months, but I'm worried about that too. We'll see how that goes when we get there. But I just want to say on the optimism side, because I don't want this video to be entire fear, even though, it's just telling the truth. But the good news is we've gotten pretty far throughout this entire bear cycle that we're in. The average bull market lasts like 200 plus days, something like that. And, we still got a lot longer to go, in my opinion. And so for me, the best optimistic thing I can say is the good thing is I have cash, and I think having cash is a smart thing. And the good thing is I do think that the time to finally start putting some cash to work and buying is coming. Again, want to make it clear, we're not timing the market here. We're just waiting for more certainty. We recognize that the market will probably catch up and figure that out before we do, and that's fine because, again, I'm not timing the market. I'm just not interested in putting my money in the fire pit and getting my hard-earned money destroyed. And the last message I want to leave you with is what I'm going to start saying in every video, and that is please take care of your mental health. The last time we had this crazy times in 2008, we had a crazy recession and stocks were getting destroyed. You had a lot of people who were harming themselves and taking their own lives. You had a lot of people, hedge fund managers and random people and stuff who were jumping out of buildings. It was really bad. It really was, guys. Not really much else I can say, but just please take care of your health. Don't let money completely dictate your life. Things will eventually get better, but you just have to ride out this storm. And since we know that the pain is coming, since we know that things are going to get worse, you have time to prepare. So whether that's taking on another job, figuring out some type of side hustle, figuring out a way to get in more income, and then taking that money and saving it so you're cash heavy, I think is one of the best things you could do. I think paying down some of your debts, like credit card debts, if you have that, is also a very wise decision. And I think the main priority going forward should be preparing for what's to come, because I think it's without a doubt that we will eventually get a recession. Maybe we don't get it this year, but we'll probably get it next year. I don't know, but I know it's coming. This is like the most obvious recession we've seen. It's beyond obvious that we're going to get one, like it's coming, and there's nothing else you can do about it. And we just have to accept it. So now that we know it's coming, now we have to start to shift to how do we prepare? And now we have to take those actionable steps to actually prepare ourselves so that way we can actually make it through it, right? And so, yeah, that's it. Just wanted to have that conversation with you guys. That's it. There you have it. Thank you guys so much for watching. Feel free to like, share, and subscribe. And I will see you guys in the next one.